Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Let's prepare for the week together, and before the bell, I want to reveal what the hedgies have been up to, as the entire world has been sounding the alarm regarding their leverage. Let me run through some headlines for you. From Financial Times, that's London, FSB warns of risks posed by hedge funds' hidden leverage. Top financial policymakers step up concerns over impact of bets on bonds. And then from Reuters, the U.S. mulls pushing banks to curb leverage trading by hedge funds. Top U.S. regulators are zeroing in on dangers posed by highly leveraged hedge fund trades and considering options to rein in risk. And then another. Fed's bar concerned over risks of highly leveraged hedge fund trading in Treasury market. Now this is the Fed Reserve chiming in. The Fed's bar expressed concerns over the risks of highly leveraged trading by hedge funds in the Treasuries. And then Regulation Asia. Let's go all the way around the world. CSRC asks brokers to curb leverage bets by hedge funds. Hey, wait a minute, Uncle Frank. These headlines are 3 to 4 weeks old. Yes, I know. Now let's examine if the hedge funds heeded the warnings, or did they double down and put us all at even more risk. From Bloomberg, and this is December 6th, BOE rings alarm bells on hedge funds' risky trade. Net short position in Treasury futures jumped to $800 billion. Central bank also warns on opacity of private credit markets. What that means is we don't know how short they really are. From that article, the Bank of England stepped up warnings about hedge funds shorting U.S. Treasury futures, saying its measure of the net position is now larger than before the dash for cash crisis in 2020. The net short position has grown to $800 billion from about $650 billion in July, the central bank said, citing calculations based on CFTC data. That suggests a jump in the so-called basis trade, which is where investors seek to exploit price differences between futures and bonds. The trade is particularly risky because returns are bolstered by borrowing money in the repo market. That tends to work well in a low volatility environment, but can backfire if the market moves fast and can even disrupt the smooth functioning of the financial system. Now hang on. Hey guys, you like charts. Let's examine this one. Asset managers, hedge funds at odds in Treasury futures. Leveraged investors have built up short positions. Well guys, maybe I can't read charts. After all, I'm a Yale dropout. My wife got pregnant and I left school. It was all her fault. But something tells me the hedgies didn't heed the advice of regulators, the Fed, the Treasury, the U.S. government, foreign governments. No. It would appear they actually hit the gas on the basis trade. I put a big red arrow pointing to the thing I'm worried about. But hey, maybe they should be worried. After all, I only own AMC and XRP in my speculative accounts. Hey, look, guys, I put a fun factoid on the screen for you. It says, in the past, theaters have been where Americans went for entertainment when the economy shrank. During the last 8 recessions, box office sales increased 6 times over. You see, I'm not worried. Guys, I'm telling you that politicians love to cash checks from hedge funds, but when the shit goes sideways, I believe from the current conversations in the financial media, they are ready to turn on them, and if matters worsen, they will be the scapegoats this time around. From Truth Out, Democrats introduced bill banning hedge funds from owning single-family homes. The bill would force hedge funds to sell all of their single-family home stock over the next 10 years. You know what? I don't want BlackRock as a landlord either. And here's some more hedge fund news from Reuters. Hedge funds suffered net $7.6 billion outflows in October, according to eVestment. Investors pulled a net $7.6 billion from the hedge fund industry in October, particularly from low-performing stock pickers, as many of these funds failed to improve their performance from last year, NASDAQ research firm eVestment said on Wednesday. This was after investors pulled a net $19.2 billion from hedge funds in September. Okay, guys, I can't find the outflows for November yet. I wonder what they say.
Now, what's this chart about, guys? Unrealized gains and unrealized losses on securities at commercial bank in the billions. Now, guys, I think red is bad on this chart, so I put a red arrow on this one too so we don't misinterpret it.
Well, there it is. SECform4.com. It tracks all insider trades on AMC. Over the past 6 years, Adam Maron, his entire board of directors, and his entire senior management team haven't bought even one share. Yet they managed to sell $1,065,433,000 worth on the open market. Wait a minute, Uncle Frank, what's that one blue buy spike? Oh, that was on Tara. The guys Adam sold Ape to for 65 cents and used to rig the shareholder vote. Just a theory, right? I check this site all the time in the hopes that even one executive will buy 100 shares, even if it's for their grandkids. But nothing, ever. The Adam Aron fanboy morons will immediately shout, but that's how they're paid. They're compensated in stock. No. These people are paid handsome base salaries and non-stock cash bonuses to boot. The stock bonuses are on top of all that. And our top 5 senior executives are also paid in the top 5 by their titles in their industry. And that includes the pandemic, where their total comp plans increased exponentially. What the people that blindly support Adam Aron refuse to admit is the pandemic was the best thing that ever happened to the Aron family. Uncle Frank, why are you bringing all this up again? Well, 2023 is almost over, my friends, and AMC is about to reward all the executives with some huge stock bonuses, while the stock is down over 91% over the past 5 years. I just thought you should prepare yourself.
Did this meme piss some of you off? Good, I made it. In 2020, AMC lost $4.6 billion, but Adam's comp plan doubled to $20.9 million. Our stock price is down over 83% year over year. Maybe it's time to reverse split Adam Aron's stock bonus. Guys, in 2020, when our theaters were closed some of the time, when we were being starved for releases from Hollywood, this was the best year this guy ever had. Hey guys, I have a question for you. When was the last time Adam Aron put out a tweet where he specifically mentions the apes? Go ahead, put it in my comments section. Look it up for me. And what about our preferred share, named after us, the ape? No more clever hashtags, the pounce, today we pounce, choke on that. From start to finish, are you satisfied with the performance of the ape? Was it everything Adam Aron promised you it would be? Be honest. Well, it was designed by Derek Van Zant from Citi, one of our short sellers, and of course our chief investment banker, who also has a sell recommendation on the stock. The ape was signed off by Philip Lader of Morgan Stanley and Adam Aron himself. Are you going to blame the Hedges for this one? Are you going to blame Gary Gensler? Here's the tweet. Candidly, I've seen no evidence so-called fake or synthetic shares exist, but many of you disagree. This preferred equity dividend goes only to company-issued shares, so it will have the impact of a share count or a unique dividend many of you have sought. Hashtag today we pounce. Well, the ape has come and gone. Did we get the share count? I guess the synthetic shares don't exist. It was all a figment of our imagination. And another meme favorite of mine on the left, hashtag checkmate. How to Profit from the Misery of the Pandemic and Your Shareholders by Adam Aron. Learn how in 2020 AMC lost $4.6 billion, but I made $20.9 million even when the theaters were closed. Bonus chapter. Learn how to invest in a bankrupt gold mine when you're teetering on bankruptcy yourself. No precious metals experience necessary. Brought to you by Philip Lader of Morgan Stanley and Derek Van Zant of Citi. Does that one piss you off? It shouldn't. It's all true. And what about Hycroft Mining? We made a near $30 million investment in that thing. It's down 97% over the past 5 years, and that's with gold setting an all-time new high. When was the last time Adam mentioned Hycroft Mining on Twitter? You'll have to forgive me. I'm not on X much anymore. You know, what happened to there's gold in them thar hills, Adam? Are you satisfied with the investment Adam made with your money in Hycroft Mining? Did you ever read the disclosures on that investment? Did we get to vote on that? If you did read them, you'd see 5 of the lien holders either were or are short sellers of AMC. Keep your head in the sand then. And since Adam tweeted about his indiscretion, he hasn't mentioned it again. Who is Adam Maron married to? AMC CEO catfish and blackmail extortion controversy explained. Does it bother any of you that at this exact same time, Adam was investing our money in a bankrupt gold mine to help out his friends, bailing out lien holder buddies of his that were or are short AMC coincidentally? It's just my theory. Right? He was also being blackmailed at this exact same time. Semaphore reported that as per the sealed federal indictment filed in the Southern District of New York, victim 1, who was Adam, was described as a public company CEO who sent Blackwood, posing as Mia, explicit photos that included him and another woman. Now, you know, Adam's been removed from the Norwegian board. He's no longer on the Centricus board, which was part owned by Citadel. Why is he still on my board? Also from that article, Aaron is currently married to Abby Khan, and the couple have 2 sons together, David and Jeremy Aaron. Do you want to know another thing I haven't seen any tweets about? The reverse split. Remember, Adam said, look, some misunderstand the 1-for-10 reverse stock split approved by 87% of the March 14th votes, saying we are stealing 90% of your shares. You forget that the share price rises tenfold at that time, exactly the same as trading 10 $1 bills for one $10 bill. Either way, you have $10. Is that what you got, guys? Is that what you got now? In your comments, some fear that after a reverse split, short pressure could cause the price to go back down. But you neglect that it's every bit as easy to short a stock priced at 3 as it is on a stock priced at 30. Is that true, guys? A reverse split itself has nothing to do with any subsequent prices afterwards. Okay, but here's the problem. You see, when the stock was higher, okay, before the split, there was what, 3,000 up to 30,000 shares available to lend and short, but the cost to borrow was 1,000%, right? Now, after the split, now that there's lots of ape that have, gone from being a like security to an actual locate, and then you do a reverse split, now there's 6 million shares available to lend and short, and it's at a rate under 1%. Do you see the difference, Adam? Now, guys, Adam Aaron never gave us a good reason for the reverse split because there wasn't one. The only reason you reverse split your stock is to keep it from being delisted. We were in zero danger of that at the time. Okay, we were never under $1 for more than 6 months. We had over $640 million in checking. There was no bankruptcy risk. The reverse split and conversion is exactly what Wall Street needed, and our investment banker, Citi and Adam, gave it to them. It was made to order. I said this in the videos prior to the split. If I were a short seller, this is exactly what I would need, especially if I was over my skis on the trade. What I need is for you to dilute. I need you to convert APE into AMC so it goes from being a like security to a locate and then reverse split. Okay? Because the stock is going to go down, guaranteed. That's exactly what happened. But I don't see any tweets anymore about the reverse split. Do you? All right, enough about all that. Let's get to the bell. Wall Street breakfast. Investors will be focused on the last Fed Reserve meeting of the year this week. While the FOMC is expected to hold rates steady, the tone from Jay Powell and gang will still be of high interest to market watchers. As it stands now, the Fed's favored inflation gauge, core PCE inflation, looks on track to end the year comfortably below the central bank's forecast and not too far off from the Fed's 2% target. Outside of the Fed meeting, the economic calendar also includes the Consumer Price Index and Producer Price Index reports, as well as updates on retail sales and industrial production. I believe this chart from Yahoo Finance confirms Alpha's comments. It's titled Fed's Preferred Inflation Gauge Continued to Cool in October. The PCE index, excluding food and energy, and the CPI, excluding food and energy, since January 1st of 2020, and so far it looks to be descending. All right, let's get ready for the bell with a quick look back at last week and the year-to-dates from exec sum. U.S. stocks rose to hit a new high for the year after the November jobs report signaled a resilient economy and cooling inflation. The Nasdaq led the indices with a 0.45% gain, and European stocks briefly hit their highest level since February of 2022 as traders bet that central banks were finished with rate hikes. Now, for the year-to-dates, S&P 500, 4604, up 19.9% year-to-date as of Friday's close. The Dow, 36,245, up 9.4% for the year. NASDAQ, 14,403, up 37.6% year-to-date. Russell 2000, 1880, up 6.8%. Gold stands at 2020, up 10.3%. Oil, 74.45, down 8.9% for the year. 10-year Treasury as of Friday, 4.25. Year to date, it's up 42 basis points. And there it is, guys. A lot of work on my part. The time window week that includes a possible final settlement for XRP, the Consumer Price Index, another Fed meeting and rate decision, the Producer Price Index, jobless claims from the Department of Labor, and possibly a $1 trillion swap expiration, and then Willy Wonka drops on Friday. But now let's see if the hedge funds can tiptoe through this week without stepping on a landmine. Don't forget, it's Swanado season. You guys probably laughed when I put Willy Wonka on the calendar. Well, let's see if you think this is funny. From The Hollywood Reporter, global box office, Wonka Wins weekend with sweet $43.2 million overseas opening. The Timothée Chalamet star made an early debut in its first 37 markets a week ahead of its North American launch. I've got news for the hedgies. The theater business isn't dead. It's just warming up, in my opinion. And one last bit of good news for you before the bell from Collider. Die Hard re-release goes sky high at domestic box office. Die Hard was re-released in theaters and brought in nearly 1 million, showing the ongoing demand for the iconic action film. The film exceeded expectations in its initial release, becoming a box office success and earning 4 Oscar nominations. Die Hard is known for its iconic performances by Bruce Willis and Alan Rickman and has spawned several sequels, although debate continues about whether it qualifies as a Christmas movie. Jordan says it does. And the theaters and movies are dead from Collider again. Godzilla -1 destroys new milestone at the global box office. -1 is already the biggest Japanese live-action movie in domestic box office history. Now, first thing this morning, the hit pieces are coming. Okay, from Seeking Alpha, AMC Entertainment, dilutive equity sales will not work forever. I don't think they're working for you guys, actually. AMC Entertainment stock has lost 86% of its value. Care to tell us why? Couldn't have anything to do with, predatory short selling. It's lost 86% since I covered it last and is now trading at nearly its lowest share price Yeah, we know the company's revenue and operating income have improved. Thank you. But its weak working capital remains a concern. I don't know. I think we've got $750 million in cash. AMC faces challenges with its balance sheet, high debt levels, we know, and the need for external financing. You know, if rates start going down, we're going to be refinancing that. A potential decline in operating income in 2024 would make it impossible for AMC to restore its liquidity position. Harrison, I noticed you didn't mention we just had the best third quarter in our entire 100-year history. Even with a solid operating income next year, AMC's net income would still be very low compared to its market cap. Well, its market cap is down because the stock is down. And, you know, I think if you could just write one balanced article a year, that would be great. No mention of the new credit card, retail popcorn expanding, merchandise sales, nothing. But that's investor relations job, and they're just not doing it. My last slide goes out to all the remaining yes voters and Adam Aron fanboys that called us shills for fighting AMC and Citi in court trying to stop the reverse split. Now that the stock is under 70 cents per share on a pre-split basis and the AMC executives sold us over $1 billion in stock they paid nothing for and are about to do it again, don't you wish just once Adam Aron treated us apes as well as he treated Antara and his own sons? I think it's a fair question. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.